Hey everyone, my name's Andy. My channel is Finding Value. If you want to partake in an insane commodity bull market coming up, if you need help, if you need looking for some investment opportunities, click subscribe. I'm helping people ride this commodity bull market higher. I'm here with you guys riding this thing just like everyone else. I've got my own money on the line here. I am very heavily invested in some of these commodities, and they make up a substantial portion of my net worth, and because I think they're the most undervalued sectors that I've ever seen in the history of looking at commodities or other sectors. Doesn't matter what it is. These are completely undervalued. So if you guys want to partake in this, subscribe to the channel. Today I want to go over a ratio update. Ratios tell us relative value. They also tell us direction. So I'm going to go over with you guys what ratios look like for this update. So introduction, again, ratio tells us relative value. I think real estate is a driver of inflation. Housing starts really is the ultimate driver in history. It is demographics driven. Stimulus thrown into the mix as well is going to cause this inflation soup recipe here to, I think, kick us into overdrive. I think commodities are going to do exceptional coming up, and when they really do well is when you have a declining dollar. So we're going to look at some of these things, and rising yields are a result of all this. People are going to get a negative real rate on their bonds, and they're going to sell their bonds because yields are going up, and it's becoming a greater negative yield. And bondholders do not like that, and I wouldn't either if I was a bondholder. So that means interest rates are going to go higher. So here's housing starts, just to show you. I put that line in, showing what the average is. We are in an uptrend. We are coming higher and higher and higher. And this thing doesn't just go straight up. It's going to go cycle back and down. This is the COVID scare, but we're coming back up. This is a structural problem that we have in real estate, where we have to make a lot more new homes. We have a 3 to 4 million home deficit, which means we have to build 3 or 4 million homes above this line over the next 4, 5, 6, 7, 8, 9, 10 years, however long it takes. So that is part of the market conditions. This drives inflation, in my opinion. And the reason is you have new loans against new homes. So it is inflationary. It's expanding the money supply in the fractional reserve lending. And obviously they're creating money through stimulus checks and infrastructure bills and all this other stuff. So this is the 10-year U.S. Treasury yield. We broke through this resistance line, and it's coming on up. Remember the symmetry that I talk about, that sometimes we may pull up, it may pull back like this. We may, come up and pull back and kind of move on higher. But I think structurally, given the demographics, I think yields are going to be moving on up if it was a free market and if it was unabated versus someone trying to buy these things and hold it down. This is the dollar, looking at it from a long-term perspective. You just draw this trend line in. We broke to the downside, and we're coming back. We have a short-term cyclical uptrend right now, coming up a little bit, and it could go all the way up here. Maybe it takes some months. Doesn't mean the trend is broken, just means that we're in a counter-cyclical trend, which will eventually resolve itself to the downside, I think, given real estate, given the situation that the government's in terms of debt. So I think eventually the dollar is going to weaken. This is the dollar Swiss franc, the last commodities boom. I have this in here just to show you that the dollar did weaken last commodity boom. And what we did is we broke this uptrend line here to the downside, signaling that we are in a scenario where we just kind of broke out like this. So it's looking pretty good for a start of a commodities boom. We have a little bit of short-term strength, but I'm guessing this is probably going to fizzle out and head back down at some point. I don't know that point, but at some point. Here's the price of gold. It is coming under pressure. We are below this uptrend line. Maybe we roll over and it comes back down to the 1600s or even 1500s. Maybe, or maybe not. We'll have to see what's in store. But eventually, this will move up given the housing starts that and the inflation that's going to be coming, which will create real negative rates. Silver, same thing as gold. It's starting to kind of peak out. The momentum was up. Now it's kind of sideways, and now it's heading down a little bit. We got to see what this does, but eventually, given housing starts and all that stuff, I still think that all these are going to move to the upside. This is the Dow to gold ratio. This was the last market back here, coming on down. We had a short-term recovery. This was the recovery phase of real estate, basically from 2009, I'd say all the way to about 2017, 2016, somewhere in here. This is when inflation started to heat up, and it usually takes a couple years for things to reverse. So this started to reverse, and you could see it reverse here, kind of come back down. We have popped up here. I think it's going to be short-lived. I think this is going to come back down, given the market conditions. Gold to oil ratio, we're still in this uptrend line. I am waiting to see this thing break to the downside. We are still in this uptrend, which means we are still extremely cheap for oil. And when we break this downtrend line, when this breaks, and that usually breaks more towards the middle to back half of a bull market, and we're very much at the beginning of this bull market still. But when it breaks to the back half, I expect this uptrend line to break to the downside and go all the way below 10, maybe even down to 5. It's going to be far higher price-wise, oil that is, towards the middle and end of this commodity bull market. And then we've got gold and silver. Silver broke to the downside, signaling that we're in a commodity bull market, and it's looking good. We could see that all the way back here if we could look. Same with copper. Copper is another signal. It's signaling that it's outperforming gold. Again, this could pull all the way back up here even on the short term. But I'm looking at this stuff from a big picture perspective. Copper's outperforming gold, and we'll see a decline in this ratio when we're in a commodity bull market. Same with platinum. Platinum broke its upward trend line, broke to the downside, and it may chill out here for a little bit, or maybe not, but it broke the big trend line. It means that something's changed. And when we look at the confluence of all these charts I just showed you, dollar versus Swiss franc, gold to platinum ratio, gold to copper ratio, oil still, that one's usually lags, uranium lags too. The energy sectors kind of lag. But we're seeing these things break these large trend lines. It means the commodity bull market or super cycle, however you want to say it, is coming. It is validating that thesis. It's validating that viewpoint. The market thinks it's coming. The market is showing us it's coming. So I go based off of what the market tells me. I don't try to make up fictitious stories. This is where we're at. This is what it's showing us. It's showing us that a commodity bull market is most likely on its way. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't. And thank you for listening. This is Finding Value.